Hello everyone and hope you're doing well. Welcome to a new video in our channel, Order Flow with Ethan. So today we are going to talk about a very important thing. So we're going to compare the order flow and a traditional candlestick chart so you can understand the huge difference between these two trading tools. So why do normal chart sometimes lie? Well, people actually just follow the patterns they see on the internet. If the market does this, then you have to do this. If X happens, do Y. If Z happens, do A. And then those breakouts fail. Those indicators often lag, and those setups that often look promising just fail in the end. But order flow is actually showing you what's happening in real time. So what I try to teach you in the order flow is not to depend on me, on what I teach you. I don't tell you, if you see this happening, do this, but I try to make you understand the core, deep understanding of the market. I want you to understand the depth of the market. I want you to understand supply and demand, why the price went up and why is the price going down. Because this is the only way you can actually succeed in trading. There is no patterns, no do this and trust me you're going to win, this is a huge win setup. Well, I actually just try to make you understand exactly the way it happens, because you're not gonna see me giving you setups, random setups, just telling you, oh, so if you see this, do this, if you see that, just do that. No, I try to make you understand the depth of the market, the supply and demand, what to do when the price go up and what to do when the price go down. So I give you a deep understanding and not just teach you random stuff that you can find on the internet. Why? Because as you can see, this stupid, I have no idea what they call it, triangle or something. So as you can see, they say, oh, you can see, so we build a line here. So when we touch the other line, once again, the price is going to go down. Why is that? Because some random guy invented this strategy and people think that, oh, that's a good thing. But you think those people, those institutionals are not stupid enough to realize that people just use this to make money and they would let you make money. They would actually just make the price go up for a while. Then you would buy and then your stop loss is going to be hit here because they can see exactly where setups are being in. I mean, like we can see it also in the order flow. We can see the depth of the market. We can use the order book to see all those orders. You can see all the limit orders, which are basically stop losses, and then we can know exactly where the price is going. And then you would be hit by stop loss and think, oh, this strategy I found on the internet is not working. What is the problem? Well, the problem is you're relying on something that is really outdated. We are in 2026. People are using AI. People see markets in a faster way than you do. And do you think you shouldn't be outsmarting them? Well, trust me, because if you don't, you're just gonna keep losing money. And this is the hard thing about trading. Because why? All those people you're following on the internet, they don't care about you making profit. They only care about selling you courses, okay? So they wouldn't spend much time uh, explaining to you the exact thing, which is wrong with their trading way. They're just gonna make you lose money in the end. And that's profitable for them. They're gonna make commission. So as you can see, they call it fake breakout and then the market just went down. So they will tell you that if the price reaches this level and it goes down, then sell. If it goes up, then buy. So what's the basis for this? What's the main reason the market would go up because you broke past the invented line by some random guy on the internet? That the market doesn't work like this. Where is supply and demand? So they think people think, oh, yeah, I'm not going to buy here anymore because the price went down because of the line, and then the market just go down. So people are gonna sell, and then everyone's gonna make profit. Well, if everyone's gonna make profit this easily, then where is the money we're making coming from? Like, doesn't it make sense for you guys? Because I want you to watch this video till the end because you guys gotta understand exactly what I mean in this video because it's very, very important in your trading career. So what's technical analysis even about? First of all, it uses price patterns, trend lines, and indicators. It also predicts, not analyze, predict and gamble the future prices based on historical data. And it can also lag in fast moving markets. And it's also an old Japanese invention dating back to 3,000 years ago to highlight market price. So people wouldn't go to the market every day. So if someone wants to know exactly what happened, they just go and check those candles, they share it on papers, etc. And as you can see, just tell them that, oh, this is where the market opened. We went down till this level, but we still ended the day at this point here. Also went up by this level. So just so people, they can understand exactly what's happening in the market. But for us to trade this in 2026, well, this is a big mistake, okay? But what is order flow trading? We actually reading actual market orders and liquidity. Also spot buying and selling pressure in real time, and it shows market participants' intention. As you can see here, well, we can see all the market orders and all the market liquidity. We can see all the buying and selling pressure. We can see all those numbers. So it's the same chart, but with added numbers. So why would you trade the chart alone? If you can add those numbers, you can see all the orders are being executed in real time, and you can see exactly who's being strong and who's being lower. Because in the end, price moves through order, not price action, not some random trend line or something such as this. This is not making the price move. This is what moves the price. It's all the orders that get filled in here. All these numbers, as you can see, are the ones that move the market eventually. And trust me, if you want to improve your trading, this is what you should do as soon as possible. So why is order flow so powerful? First of all, it confirms if supply and demand zones will hold. It also helps spot entries and exits with deep precision, and it also reduces false signals from just looking at the price alone. So let's see the core difference between technical analysis and order flow. First of all, for TA, it's lagging and it's price-based, so we're only trading price-based markets. But for the order flow, it's real-time, volume, and order-based. So it's order-based and also price-based, because you have the normal chart with added orders. So we have both in one. Also, for TA, you're not only identifying zones, but for order flow trading, we identify timing. So for technical analysis, so each thing has its pros and cons, as you know. So ease of learning, it's simple for the technical analysis, but for the order flow, it's gonna sound complicated at the beginning. Same thing happened to me when I just started. I was like, what is this gibberish thing I see in front of me? You cannot understand it, but trust me, 2-3 weeks on, you're gonna be feeling normal. You're gonna feel okay for you. You're gonna trade it normally, trust me. Then for the predictive power, for technical analysis, it's often lagging, but for the OFT, it's always real-time insights. That's why it's called footprint. You see footprints of people just following those footprints to analyze exactly what's happened, and that's why we called it and we named it footprint. For reliability, technical analysis relies on trends and price action, but order flow relies on trends, price action, plus supply and demand. And in tools for technical analysis, you're just following indicators and patterns, VWAP, MSI, RSI, whatever they call it, stupid stuff that was made for you to keep losing money, and you still trust it in 2026. But for the order flow, you have footprint charts, you have orders, you have delta, all those things that help you understand who's stronger and who is weaker. So how do institutions see the market? Do you think they see it the same way as this, like false breakout, do this support and resistance flip zone, or support, which means the price is going to turn higher from here, and the resistance price is going to turn lower from here? Why? Because trust me, I know everything about the market. That's what's going to happen. Why? I mean, why asking questions? Just do what I'm telling you. Trust me, it doesn't work like this at all. So they anticipate stop loss clusters and liquidity points. They create fake breakouts to absorb all those retail orders, and they don't rely on textbook patterns. They read real order flow. So it doesn't mean they read the same order flow as we do, but general name is the order flow. We're doing here order flow footprint charts, and they follow the same thing. They follow the flow of those orders. So they teach you that when the market reaches this level for the third time, when you should sell because that's the resistance, and the price will just turn lower from here because of some power that we don't know about, some spiritual power that would make the price go down. But eventually it doesn't happen in the end. But what the market actually does, they would show you this resistance zone and everything. But once it reaches it, it's gonna give you a false breakout, hitting your stop loss, and then maybe turning down. So it just goes above prior swing high. And yes, as you can see, the price is going to keep going. Maybe you'll think, oh yeah, so this is my support zone. The price is going to turn down here, up here, just because of spirituality or something. I don't know. Well, it doesn't work like this again. I'm so sorry to break it to you, but it doesn't work like this. The price is going. If you check the order flow, there's potentially some buying opportunity that would happen if you see buyers getting strong at this level. But not just think that when we reach that level, that means you should buy or you should sell if you just break past it. Price action alone is not gonna get you anywhere. You need orders. You need to understand the order flow. You need to understand supply and demand. So when you mix them together, trust me, that's gonna be a great thing. I'm not insulting technical analysis alone. I'm insulting it when you use it alone. But when you combine it with orders, with depth of market, with order books, footprint, whatever, something that really gives you an edge about the market, something about supply and demand, that tells you a lot, that confirms to you, okay? So how do you identify supply and demand with the order flow? You should look for high delta on absorption zones. You should watch footprint imbalance at key levels and confirm with volume clusters and depth of market liquidity. So why do retail patterns always fail? Not always, but most of the time. So same thing again, they say, oh, it's gonna keep going down, reach this level, the price is gonna, you should sell because whatever. Those retail traders follow patterns and ignore the liquidity in the market. Institutions just trigger your stop at obvious spots, support and resistance. Those people spend a much amount of money in propaganda for you to believe that the price will go down at this level. Then you would just hit your stop loss and then they're gonna win. Why? Because you don't have an edge of the market. You're not understanding supply and demand. How do you think they would let you win just because you want to win? It doesn't work like this. Charts only show the price, but not the intent. So TA tells you where to look, order flow tells you when to act. Chart alone can mislead in fast markets, and combining both will improve your trading precision. So this is it for you guys today. Thank you so much for everyone who stayed till the end. So just for you to know, order flow is great, but when you mix it also with technical analysis, that's gonna be a huge win for you. But don't rely on technical analysis alone, because that's just gonna make you keep losing money day after day. So if you find this insightful, please make a comment, like this video, and subscribe if you didn't subscribe yet. This was Ethan from Order Flow with Ethan. Thank you so much.